Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 12th, 4:46 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, still in a correction, a little bit of a less of a correction and more of a short-term uptrend after all the dust settled after CPI this morning. Intense volatility between from 8:30 to 9:30, actually carrying that over to about 10 o'clock before a direction was established to the upside and then pullbacks were bought. So a win for the bulls is my takeaway on CPI. Check over here at the trend gauge. Still neutral with a bullish undertone on leading stocks. All five of the major indexes that we track continue to improve. Short term, all five are above their 21-day moving average, and the slope of the line is higher. That's as good as it gets on the short term. Medium term, we've got two closes for every index above the 50-day. We want to see a weekly close above the 50-day for all of them before we move the medium term off of neutral and up to bullish. And long term, uh, improving, but the slopes of the lines, the moving averages are still down, and we've still got the Nasdaq below the 200-day moving average, and the S&P 500 closed basically right on its 200-day moving average today. So improving. Also important to note, during this bear market, we did get one weekly close above the 200. So if we get another one tomorrow, it doesn't necessarily mean we're out of the woods, although a lot of concern, at least for another 2 weeks until the Fed meets on February 1st. Is the next big number, the next big occurrence that we have to look forward to. So it'll be interesting to see which way the market uh, trends going into that event. And we're seeing more breakouts than we've seen at any point during any bear market recovery. That's a good sign. That's going to be the focus of charts of interest tonight. So as I said, what just happened? CPI volatility resolved higher. Boy, was it volatile pre-market. S&P 500 closed at its 200-day moving average. Here are the numbers on the day. G6 up a little over 1%. S&P basically closed right where it opened, up 0.34%. When we go through the tail of the tape, I'll talk about the volatility. Nasdaq 100 up 0.55, Dow up 0.64, midcaps up 0.9, Russell the leader up 1.7. Global diversified stock and bond 60/40 up 0.65%. In-house, we added more exposure after resolving to the upside today and holding that 39.50 level. In the morning, we were up 0.24%. Now have our equivalent exposure of 0.5, or half the risk of the S&P 500. Let's get into it a little deeper. We'll take a look at the S&P 500 chart, explain what we do here at Revere, go through all the indexes, and then the tail of the tape. So at Revere, we are active trend followers, looking for the trend to get back higher. We track the trend over 3 time frames. The green line is a short-term 21-day moving average. The red line is a medium-term 50-day moving average. The black line is the 200-day. When we're trending all above them, we're as long in the market as we are comfortable being. If that trend starts to slow or roll over, our stops will take us out of the market. If the slopes of the line start to roll over, we'll become even more defensive. If we break the 200-day moving average, that's the black line. That's when we really kick up the defensiveness, because all these bear markets on here occur below the 200-day moving average. On average, from the top until you break the 200, it's about 12% down. It's what happens under there that causes heartache, both financial heartache, personal heartache, and pocketbook heartache. And we strive to stay out of the way of that at Revere. And our rules, and we're fully transparent. We do a video every night, podcast on the weekends. You always know what we're doing, what we're thinking. What we do shouldn't surprise anybody if you follow us. We basically have pretty much laid out what our rules are, what our 3 time frames are, how we track leaders. We talk about them with the 21/21 list. We talk about what we're looking at for the indexes, and then we take action. And We look for your feedback and the feedback from the market. So if you're interested in this approach, you do not have to be a slave to the market. You can protect your downside, especially crucial if you're approaching retirement. Give us a call, email don@revereasset.com, or my partner Dan Stewart, dan@revereasset.com, or phone 855 real wealth. That's 855-732-5932. Not all asset managers are created equally. So here's the S&P 500. You can see we closed right on the black line, basically one tick lower. Pre-market, extreme volatility, and that volatility, as I said, carried over. This move, you saw this twice, this V pattern, saw that twice. The initial move down, we were up near the highs at pre-market. We were at 39.88. When CPI came out, we immediately dropped to 39.35, right back up 39.99, back down, back up again. Here's where we opened, 39.82. Quick sell-off. Everybody thinking that was a fake for the bulls. We're going lower. But we held that pre-market level again, 39.37, pre-market low 39.35. That's also above yesterday's low. That's a good sign. Got a strong bounce then, up to 39.82, basically where we opened, a little bit below where we opened. And then we formed a base, and then you wait for that base to resolve. Will it break higher, break lower? 12.10, we broke higher, trended higher right up into the 200-day moving average, broke back below it. This was an attempt to shake the trees. Harsh move down here in about 15 minutes, held 39.70. So basically that was a pullback test, and we passed it. Didn't break this intermediate low from a little after 10:30. Sprung right back up to highs of the day. A little bit of a fade into the close, perfectly normal. Back down to 39.72, and then up to 39.83 at the close. All in all, a win for the bulls when the dust settles. That's my take on it. Let's go to a daily chart back here. And as I said, so 8 came up through the 21 today. That's bullish. 8's coming up through the 50 tomorrow. Next week, the 21's going to cross through the 50. That's also bullish. And here's the only other close, weekly close above the 200-day moving average, going all the way back to March of last year. That didn't hold. We tried again last CPI report and we reversed. This CPI report also resolved positively, but did not close off the low. So that's another plus for the bulls. Granted, this was up at 41.01, so there may be some valuation issues there. Thing to look forward to now is earnings. They start big time next week. They start tomorrow with 4 of the major banks. We'll see how the reaction there is and how it trickles over into the indexes. But for now, a close right around here. In effect, we've been up for 5 straight days off the bottom here after we held that 37.80 level for the last time. So basically straight up from 37.80 to 4,000 in 5 days. That's a pretty quick move. We need to work some of that off by going sideways or pulling back in a constructive manner. Here's the NASDAQ 100. 2 closes above the 50-day moving average. Note the slope of the 50 is flat here. So a flat slope and you go up and down above it normally represents indecision. What you really want to see is the slope of the line in your favor. When you pull back, you bounce off of that line sloping in your favor. So the slope of the line is definitely important. Quite a way to get to the 200-day moving average on the QQQ, but the equal weighted is already above the 200-day moving average, as we pointed out last night. Let's go to the Dow Jones Industrial Average. Up 0.6 on the day, so led the NASDAQ, led the other 2 indexes, the tech-heavy NASDAQ and the diversified S&P 500, above 34,000. If you just look at this, you wouldn't think we're in a bear market, although the slope of the 200 is still trending lower. Relative strength lower, but not today. Over the last week and a half, that's typical when you're going higher because this is a lower beta index. But nothing to complain about here at all on the Dow Jones Industrial Average. Also nothing to complain about on mid caps. They continue to show relative strength 1, 2, 3, 4 weeks now, making higher highs above the moving averages. Slope of the 200 still down. Slope of the 50 up, slope of the 21 up. 21 going to come through the 50. The 8 came through the 50. Good stuff here on mid caps. Note we're getting overbought. Now we can stay near overbought for weeks at a time. You can see 6 weeks, 5, 6 weeks here, 4 weeks here. Never know which way. It's not an automatic sell signal. It's just that you're on guard if you start to get sell signals and roll over hard. So we'll be keeping an eye on that, of course, and tracking it in the tail of the tape. And here's small caps, a definitive move above the 200-day moving average. The leading index today up 1.7%. Two closes above the 200. The slopes of the lines are pointing up, except for the 50 days flat, and the 200 is still declining, but the 8 and the 21 are going to come up through the 50. That's more good news there. What we want now, the key is controlled pullbacks. Let's look at those equal weight indexes very quick. RSP still looking great, and QQEW above the 200-day moving average, whereas the NASDAQ 100 QQQ isn't even close. Let's go to the VIX. Huge move down today in the VIX. Not really equal to the small gains that you had on the S&P 500. I'm a little concerned it's getting stretched to the downside, but if you look at the stochastic, it's really not. It's still, in fact, it's been playing ping pong between overbought and oversold. Nothing too extreme there, but definitely on guard because this is where the lows have been for going all the way back to April of last year, this 18 to 20 area. Today we closed at 1890, down 10.4%. The bears cannot believe it. Probably also can't believe that the dollar continues to go lower. And down 1%, breaking through the bottom of this flat base today. The dollar is, and that is a tailwind for stocks. We barely got out of oversold before we reversed back in oversold again. Doesn't seem to matter. The trend is down. Just one close above the 21, and that completely undone over the last 5 sessions. Very clearly, we're in a downtrend on the dollar. And I did read a nice article about this last night that this happens frequently when there are global concerns about the economy. Money flies into the dollar. When those concerns get alleviated, it starts to come back out. And there were some nice charts in there, showed over history. So I really need to stop looking for a positive reversal in the UUP because it does trend lower when the economy is improving, and money flows into the U.S. during difficult times and flows back out to some other markets when we get less uncertainty. And inflation appears to have peaked globally. In fact, if you just take the last 6 months of inflation and we stay basically in line, we'll be at 2% over by the midsummer. We'll be closer to 2, but between 2 and 3%. So whether you trust the numbers or not, the numbers are the numbers, and that's what comes out, and that's what the market reacts to. So there's the dollar. Let's flip the bonds now. Broad bond index up means lower interest rates, trying to get above the 200-day moving average for first time that we can see on this chart. LQD, this is corporate bonds, also above the 200, second close above the 200. In fact, junk bonds, that's telling me risk on above the 200-day moving average. Also the 30-year TLT, still under the 200, but trend up means interest rate down very clearly. Sorry, I got distracted there for a second. TYX 30-year bond lower. Interest rates going down. The market does not believe that the Fed is going to continue to raise rates the way they said they're going to. We'll let it play out. We don't predict. And there's the TNX making lows going back to the beginning of December. The trend clearly down there also. How about gold, GLD? Dollar down big. You'd expect this to be up big, and it was up 1.6%, making new recovery highs. How about silver? This has been lagging gold lately, up 1.5%. Putting in a handle here in this big cup and handle. And how about gold and silver stocks? GDX up 1.9% today, higher highs. Also on this recovery, it's been doing a good job of riding this 21 higher. So those are the big indexes. Oh, hey, Bitcoin, risk back on in Bitcoin. Let's go to up 8.7% today. This is a breakout above the recent highs after this nice base here. So, hey, Bitcoin back in the game. Interesting take on it. But tight consolidation between 950 and 1150 for 2.5 months. This is Sam Bankman-Fried breakdown here on 11.8. So it's been a little over 2 months, and looks like a trend change today, breaking out of that flat base. Let's get to the tail of the tape now, and then we're going to blast through 56 breakouts that I have. I know there's more, but this will give you a good feel of what's going on in the market. I'm seeing a lot of people saying there are no good setups. Well, there were. 56 of them broke out. Not all perfect cups and handles, but when you're coming off of a bear market, you're looking for signs of strength, and I can show them to you. Headwinds, we took the dollar off of here. The stochastic of the dollar, with the dollar being below the 21, that's now a tailwind, no longer a headwind. Still showing inflation, recession, Fed quantitative tightening, and rising rates. Russia, Ukraine, all the stochastics in a favorable position. VIX, as I said, below 19. Fear and greed up to 57. That's really neutral. AAII, bulls ticked up from 20.5 to 24.5. Minor ticked down in neutral, and a tick down in bears. So maybe that extreme that we got last week we'll put in the bottom along with the market. Bull case getting stronger here. We'll update this tomorrow. CPI all in line. There were 4 numbers: the year over year, the month over month. All 4 of them exactly to the 10th of a percent hit what the expectation was. Fed Speaker Harker came out and said, it seems like 25 points is appropriate for the next interest rate hike. And I think the odds of 25% are now over 95%. That's in 2.5 weeks. Day count from 4 up to 5 up, trending 5 higher above the 80 EMA and the 21 EMA. As I said Friday morning, we've got bank earnings expectations were positive. Of course, that was pending CPI. CPI a win for the bulls. This resistance area, we pulled back, didn't even get to it, so that's flipped to support. Today's low 39.37. Still in the resistance range here on the NASDAQ 100. CPI action all over the place. And then that 30-minute 1% down set a panic, but really 39.50, we've been talking about how that was a support resistance area. When we undercut it and reclaimed it, that's when we started adding to SSO to get longer versus the indexes. And then we went up to 39.92, based for 2 hours, resolved higher. A pullback also held, and then chopped into the close. This was what was interesting. The normal overnight low was 39.64, and the normal overnight high was 39.92. We were at 39.88 when CPI came out. We immediately spiked down to 39.36. That set the new low. In fact, as I mentioned, the low intraday was equal to that low on that spike low pre-market, and then afterwards we worked our way all the way back up to 39.99 pre-market, pulled back a bit, opened at 39.79. That 39.99 held for the day. Today's high 39.98. So all in all, a win for the bulls. Bond prices up today, meaning yields down. Gold, and silver stocks, PIC, that's the base metal ETF. Oils strong. KBE bank strong. Clean energy strong. Biotech started out weak, ended up strong on the day. In fact, it broke out above 84. Keeping a close eye on that. ITB also strong, despite a negative that started negative and finished strong despite a negative reaction to KB Homes. All of the other leading home builders bounced higher after an initial start down. Bond yields down today, dollar down. Let's see, these 3 defensive sectors, PUV, staples, utilities, and healthcare, all finished lower. That's a feather in the cap of the growth bulls. As I mentioned, bought SSO, started to add back to our position the AEHR, brought the beta back up from 0.33 to 0.5. Bottom line, CPI volatility resolved higher. S&P closes at the 200-day moving average, 39.84. Actually, we're above the 40-week by 30 points. It's at 39.54. So, but I think everybody's focused on the 200-day moving average more than the 40-week, because I really don't hear many people talking about the 40-week. Anyway, let's get to our breakouts. We're going to go through these pretty quickly. I don't want this video to take forever. These are sorted by percent up today. And we'll start off with a positive reaction to a semiconductor earnings report. Taiwan Semi up 6.4% on the day, gets it above its 200-day moving average. This little mini cup it broke out of, that's a positive. Certainly for the bulls. I'm going to take stochastics off so we can see these charts a little bit better. There you go with your breakout on Taiwan Semi. WFRD, oil and gas machinery equipment. Really what we're looking at is highs. They may have broken out late December or early January and continued higher. Crocs, definitely a growth leader. Box, this broke down, had a nice day today though. This actually goes in the Q1 fail list, and I already had it on there. I'm keeping them all in here, all the breakouts, to see if they're failing or not. So you may see some that failed. Rio, new high today after the cup and handle breakout. Boeing continues to just rock higher. Southern Copper straight up for 7 days. Schlumberger breaking out today. AU continues to trend higher along the ADMA. Halliburton, higher high today. Ralph Lauren broke out higher today. HTHT, higher today after a secondary offering. That's a big positive. Wynn Resorts, straight up with the China Macau reopening. ACLS, one of the leading semiconductors, a little on the thin side, however, but you can't argue with 7 straight up days. IRDM, big move up. Tight flag resolved higher today. GDX, we already talked about that. Caterpillar broke out at 140, paused, or at 240 up to 250 now, and blowing through 250. Tapestry, apparel clothing manufacturer, kicking butt. Elf, this is a breakout that turned into a loser, as anybody that follows our videos knows. It's on Q1 fail. It is now. GE continues to rock. EWW, this is Mexico breaking out. Jabil Circuit, 5 days straight up. Fez, this is Europe breaking out. Let's go down here and look at like the worst 5 or 6 to see what they did today and how that is in their patterns. Here's CMC, metal processing and fabrication, big breakout, consolidating at the highs. Ross Stores broke out, putting in a handle now, maybe giving you another chance if you're interested in it. 5, pulling back a little bit after breaking out of that flat base. Alibaba taking a break after 5, 6, 7 straight days up. KB Home, this is the one that reported was initially down much more than the 3% that it closed down. And all it did is undercut and reclaim the ADMA during that pullback. HPE, I guess you could call this a near failed breakout, hasn't reached the pivot minus 7% yet, but that's not the action you want. And QFIN, this is Chinese, straight up pulling back below the ADMA. So there's a look at some of the 56 breakouts that we have, and that's going to wrap it. As always, love to hear from you. Email's don@revereasset.com. The phone is 855-REAL-WEALTH. Remember, it's not how much you make in the market, it's how much you can keep. Can't wait till we get back to a bull market so I can stop having to harp on that. But downside protection is where we start. And then when the market gets healthy, we compound from our higher base because we didn't have to sit through nauseating 20, 25, 30 or more percent drawdown. So wrapping up, CPI Thursday, January 12th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.